Good morning to all of you. We all are celebrating 7th year's anniversary of GST. We all know GST got introduced on July 1, 2017. We are keeping vision of looking Viksit Bharat by 2047. We are heading for. Indeed, we are heading for. We are 5th largest economy. And from GST perspective, you will agree with me, we started only with 68 lakh registered person in 2017, but now we are 1.4 crore registered person. Initially, we were having average collection of 90,000 crore rupees per month, but now we are heading towards 2 lakh crore rupees per month. Look at the growth of GST in last 7 years. Our economy is the fastest growing economy, 7%, which is endorsed by World Bank also, across all countries in the world. So looking at the vision and dream of our Honorable Prime Minister, Viksit Bharat, yes, we are heading for. How GST can contribute? Yes, we all are talking about GST law is a unified law. And I must say it is one law, one tax, one market, common market, and applicable from Kashmir to Kanyakumari. Irrespective of any language, pre-GST we have seen we were divided in state-specific VAT provision, in their own language, in their own procedure. But now it is unified law, pan-India, Kashmir to Kanyakumari. Whatever applicable in Delhi, applicable in Kerala, applicable in Tamil Nadu, and big opportunity for all CS professionals. And CS numbers, which I said, is showing where we are heading for. So GST is becoming important, integral part of our professional activities. Having said that, GST has done away multiplicity of taxes, double taxation, cascading of taxes, and this is what the resultant outcome, and it is biggest indirect tax reform since independence. So these are the feature of GST which we have seen last 7 years, and government is committed. GST Council, where center and state both sitting together, they are committed to ensure ease of business and making compliances easier day by day. The recent example, 53rd GST Council meeting, which held on 22nd June 2024, you have seen number of recommendations towards ease of business, to reduce litigation, and many clarification. So the point and subject matter which has been given to me, I'm going to discuss some of the recent amendment helping to the taxpayer. Taxpayer are getting advantage. And I'm picking up number of recent amendment which is being recommended in 53rd GST Council meeting. So I'm going one by one, and I'm sure my participants, audience must be taking down those pointers, and these are important pointers. Before I start, I must say, we as a torchbearer of legal and secretarial compliances, as a company secretary, it is our earnest responsibility and duty, I must say, when we are signing as a company secretary, the signature of company secretary on the balance sheet itself shows our importance, our credential in this market. So any company having signature of company secretary, you can understand what kind of responsibility, duties, and obligation we carry on our soldier. You can always say with the GST, you may be or you may not be doing GST in your regular practice, but let me tell you, can you say that any legal and secretarial compliances report or signing balance sheet is possible without having knowledge of GST? To my mind, no way, no way. And we can't. See, this is the opportunity which is growing faster. So it's an opportunity for all of us together being professional to grab immediately for the professional growth and development. GST, as I said, from 90,000 crore rupees per month, even government has reached to 2 lakh crore rupees per month, and they're heading for. So look at the opportunity, and GST become part and parcel of cost and sell price. So your decision is very important. Your managerial decision is very important. So input tax credit, which is GST on your purchase, credit is available or not available. If credit is not available, it becomes cost, and thereby we are not having that much profitability. GST chargeability on outward supply, again important. What rate applicable? What is the classification? Whether the company is discharging GST liability or not. When we are signing balance sheet or giving any certificate, legal and secretarial, can we say without GST we can do that? To my mind, it is not. So we have to really grasp this opportunity, get ourselves prepared. And I can tell you, we are no less than any professional. We are much ahead and far ahead to give our endorsement, that signature, credential signature of company secretary. So let's start and put together. And I always say together we will make difference. Create the difference that we are the unique profession and we can take any challenge which is coming to our way. So this was my opening remarks on 7th year's anniversary of GST. Let me start my topic today. Recent amendment in GST. I'm first picking up time limit to avail credit in GST. As a taxpayer, we are availing credit in GST 3B. We all are aware of. But there is time limit. As per section 16, subsection 4 of CGST Act. What is the time limit? Earliest of due date. Due date of furnishing return under section 39 of CGST Act for the month of September following the end of relevant financial year, or due date of furnishing annual return, whichever is earlier. This was the provision existing until 30th September 2022. From 1st October 2022, they have amended. Now it is 30th November following the end of relevant financial year or due date of furnishing annual return, whichever is earlier. But what happened? In initial years of GST, when GST was in nascent stage, 17, 18, 18, 19, 19, 20, 20, 21, we may have missed availing credit in GST 3B within the time limit as prescribed. So September following the end of relevant financial year for 3B. So it is 20th October following the end of relevant financial year. We may have missed, but now this is the unique opportunity for all of us together. And it is recommendation of 53rd GST Council meeting. If you have missed the time limit, listen very carefully. It is opening up. We have filed the SLP in the Supreme Court only on this time limit. Now all these SLP going to be resolved only because of this recommendation. And this is going to be part of section 16, subsection 4, which will come in the union budget and expected to be on 22nd or 23rd July. Official information is not yet out, but this is going to be part of Finance Bill 24 and then amending the CGST Act. So what is the change? For the financial year 17-18, and I'm sure you must be taking down for your advantage, for your professional acumen, and for informing to your client who missed the deadline and their credit is being denied. They might have got the so-called notice. So you can help them out for 17-18, 18-19, 19-20, and 20-21 for all 4 financial year. Now the due date for availing credit would be 30th November 21. 30th November 21. So meaning thereby for 17-18, your due date would be 30th November 21. Only condition, you must have availed credit in your GSTR 3B. So this is the great advantage coming to all of us together. Coming to the second point important one. And here, I would like to draw the reverse charge. As a director and director providing services to the company in the capacity of director, not as a whole-time director, not as a employment, not as an employee. So, director providing services to the company is under reverse charge method. Company need to pay GST under reverse charge by notification number 13/2017. So first of all, you need to check whether any director to whom you're paying meeting fees or some kind of consideration, and that is not under employment contract, and you are deducting income tax TDS as a professional or technical services under section 194J of IT Act. If TDS is being deducted as salary, then this RCM is not applicable. RCM is applicable only when director giving services in the capacity of director and meeting fees and some kind of other consideration which has been given in the capacity of director to the company. Company being recipient need to pay GST under reverse charge. But I'm taking one example for all of you so that you can see the important advantage. Let's say for 1920, you were supposed to pay reverse charge as a company. You did not pay. You come to know today in 24-25 that reverse charge liability was there, but you have not paid the reverse charge liability. Question will come, can you pay reverse charge now? First, and if you can pay now, can you avail credit? And that too pertaining to 1920. So this is important from two perspectives. So now there is recommendation and there is circular. And circular number is 211 dated 26 June 2024. So you must take this advantage for the past financial year. So I have only picked up the director, but there may be other notified goods or services subject to reverse charge. So I'm not only saying for the director, I only picked up relevant example in our, legal and secretarial, but any notified goods or services subject to reverse charge wherein recipient need to pay GST liability. So notified goods falling under notification number 4/2017. Notified services falling under notification number 13/2017 under section 9 subsection 3 of CGST Act. And under section 9 subsection 4, when you procure from unregistered supplier, that is being done away from 13th of October 2017 and now made applicable only from 1st April 2019 for real estate sector. When you are not procuring specified percentage from that registered supplier. So that is what the provision all about. So reverse charge liability of past financial year, can you pay now? And here question is, if it is being procured from unregistered supplier, so director is not registered, he is unregistered. Being company, you are registered in GST and you need to pay GST of 1920. Can you pay now? Look at the answer which I'm giving to all of you. Yes, you can pay now. Can you avail credit? Of course you can avail credit. Of 1920, you can avail credit. Even though section 16 subsection 4 has got time limit. But that is what the recommendation of 53rd GST Council meeting read with the circular number 211 dated 26 June 2024. So you must take. So how come it is possible for procurement of notified goods or services, including director example, which I have taken from unregistered supplier? Quite obvious, he will not raise any tax invoice in GST. So being recipient, you will raise invoice to yourself, which is called self-invoice. Under section 31, subsection 3, clause F, you will raise the self-invoice to yourself. When you will raise today's date, 1st July 2024, you will raise in today's date of 1920. And this would be eligible document for you. And when you pay reverse charge liability in terms of Rule 36 sub Rule 1 Clause B, you will avail credit in 24-25 of 1920. Only thing you should keep to your mind, which is RCM, it was due in 1920, right? You're paying today, availing credit today on the basis of self-invoice, but POT, time of supply, must have arisen in 1920. And as per Section 13, subsection 3 of CGST Act, POT, time of supply, would be either date of payment by the recipient or date following the end of 60 days. So 61st day become the time of supply. You should have paid by your RCM liability on 61st day, which you are paying now. So interest going to be leviable, and interest rate would be 18% per annum. And RCM liability always paid in cash. You can't use GST credit. And even interest need to be paid in cash. So RCM credit of 1920 paid in 24-25 on raising self-invoice credit is available, but subject to interest. And interest is a cost to the company, but advantage, great advantage. You can go back and check your past financial year transactions. Point number 2. Point number 3 on 16.4. In GST regime, we have seen a lot many dealers' registration get cancelled for number of reasons. Either he is not continuously filing GST return, thereby department is cancelling the GST registration, or any other reason also, non-existent you have seen, or you have seen that they are finding some kind of, fake registration taken by the supplier, many factors. But wherever any cancellation of registration is being done, quite obvious that after cancellation, you will not be able to file your 3B, and then you will not be able to avail credit, and that too within time limit. So maybe a challenge, your registration got cancelled. You could not file your 3B because of your cancellation of your registration. Now, once you file revocation order, and your revocation order passed for the cancellation of GST registration, so department has revoked your cancellation, then you can file your GST return. But by that time, if time limit is gone for availing credit, what you will do? A clarity. You can file all your return within 30 days for the period cancellation till revocation. So once revocation order is being passed, within 30 days, if you file all your return for the period date of cancellation till date of revocation order, you will be able to get credit, and that is not barred by limitation under Section 16, subsection 4. Great advantage to all of us together. But when I'm talking about registration getting cancelled, we know the fake registration has happened, many. And there's so many unscrupulous person who has come to the supply chain. They have raised the invoice, but today they are either non-existent or they are not traceable. They might not have paid the taxes. Then government has also recommended compulsory introduction of biometric Aadhaar authentication. They have introduced this system as a pilot project in Gujarat and Puducherry. Now it is going to be pan-India. So whenever they are giving registration, they will do compulsorily biometric Aadhaar authentication to remove this unscrupulous person from the supply chain, laudable one. So this was on Section 16, subsection 4. Now I'm coming on second point when I'm talking about that the age of business. What are the things? Coming back on litigation. What are the decisions taken which is going to give us the advantage to all of us together? Pick up the first point under litigation. First point. Let's say you as a company or as a taxpayer got some so-called notice under Section 73 of the GST Act. And 73 is a non-fraud case. So either for non-payment or short payment or wrongly availed credit or utilized credit, except erroneous refund. If you have got the so-called notice for 3 financial years, and you must listen this carefully, your interest and penalty going to be waived off. Advantage, no interest, no penalty for 3 financial years, 17-18, 18-19, and 19-20. So-called notice is being issued if you pay the demanded amount by 31st March 2025. 31st March 2025. Then there will not be any interest and penalty. Advantage. And we will get the advantage of this particular, litigation. And this is what the recommendation of GST Council in 53rd GST Council meeting. Of course, on this point, I've got one observation. They are compliant taxpayer and they are non-compliant taxpayer. Compliant taxpayer may have paid interest also, may have paid penalty also. And under Section 73, 10% of the tax amount is the penalty. But what about, they are not getting any advantage. They have paid the amount. And you are giving advantage to the non-compliant taxpayer. To that extent, I'm having my reservation and observation that yes, these amnesty is helping to the non-compliant taxpayer at the cost of compliant taxpayer. But this is irony, since recent amendment was the topic. So I'm apprising to all of you, if you have not paid the demand amount, 17, 18, 18, 19, and 19, 20, and period age 31st March 2025. It is going to be by amendment in the Act. So it will be the part of Finance Bill 24. Wait for the budget day. And it is going to be available to all of us together. So this was on first litigation point. Second point, even government is willing on national litigation policy. What is this national litigation policy? To reduce litigation. To reduce litigation, they have principally decided that they will fix up the monetary limit not to file appeal in the appellate tribunal, High Court, or Supreme Court. So GST department fixing a limit for themselves and saying that they will not file appeal. So what is the monetary limit fixed? Up to GST tribunal, 20 lakh rupees. Department will not file appeal. High Court, 1 crore. Supreme Court, 2 crore. Department will not file appeal. You as a taxpayer always file appeal. You are having right to file appeal, except one provision, 112 subsection 2, section 112 subsection 2, wherein GST appellate tribunal at their own discretion may refuse to admit appeal if it is less than 50,000 rupees. So this provision you should keep to your mind. Second one. Third one under litigation. Whenever we are filing appeal before first appellate authority, which is Commissioner Appeal, and second appellate authority, which is GST Tribunal yet to be formed, they're the criteria of pre-deposit. Compulsorily mandatory pre-deposit. So when you are filing appeal before first appellate authority as per section 107 of CGST Act, what we are doing today, first you have to pay your admitted tax, interest, and penalty. You have to pay full admitted one. 10% of disputed tax need to be deposited as a compulsory pre-deposit, subject to maximum of 50 crore. 25 CGST, 25 SGST. Now this 50 crore going to be reduced to 40 crore. 20 crore CGST and 20 crore SGST. When you go to a tribunal, when you are filing appeal before GST 80, the present provision is 20% of disputed tax, subject to maximum of 100 crore rupees, 50 crore CGST and 50 crore SGST. But now they are saying this 20% of disputed tax going to be reduced to 10% of disputed tax, subject to maximum of 40 crore, as against 100 crore, 20 crore CGST, 20 crore SGST. But here my another observation, an important one. See, if you go back to pre-GST era, what was the amount for filing, for making mandatory pre-deposit? It was only 7.5%. Of disputed tax, subject to maximum of 10 crore before first appellate authority, and additionally 2.5%, totaling together 10% of disputed tax. But now, as per the revised recommendation, 10% before first appellate, 10% before tribunal, it is 20%. That is what not comparable. To that extent, our recommendation, again, our submission and representation to GST Council. So this is on pre-deposit. Coming back to the last point of litigation, that our GST 80 is yet to be formed, and President got appointed. All right, President got appointed. Just give me half a second. Yeah, back to you. Now, what is my last observation under litigation is that GST 80 is yet to be formed. Now, when GST 80 is yet to be formed, the President has got appointed, and he got appointed on 6th May 2024. And as per filing appeal procedure before GST 80, it is 3 months from the date when President is being appointed for GST 80, which is about to expire in the August 24. But the GST Council has made recommendation, and they are saying they will notify a date. So this 3-month criteria will be calculated from a date to be notified. So great relief, major to all of us together. So it was on litigation. Coming back to the return, what are the recent amendment? You file your annual return, right? GSTR 9 and composition dealer 9A. So what they are saying for financial year 23-24, annual return is due by 31st December 24. So they are saying if your aggregate turnover is up to 2 crore, then you need not require to file GSTR 9 and 9A. Advantage. And 9C is not applicable, because 9C is applicable when aggregate turnover is more than 5 crore. So you should keep to your mind, if your aggregate turnover up to 2 crore for 23-24, no 9, no 9A, no 9C. So this is one. Second one is the interesting one. We file GSTR 1, right, for outward supply. And then we file GSTR 3B. But sometime while filing 1, we miss the transaction of our outward supply. Or sometimes we make mistake. And once we have filed 1, then data gets auto-populated in GSTR 3B. And then you realize that you have missed some transaction which you were supposed to file in 1. or you come to know that you have made the mistake while filing your GSTR1, but you can't rectify. Now they are giving a good features which is called GSTR1A. GSTR1A. So after filing one, if you want to include any transaction or want to amend any transaction, then GSTR1A would be available to you so that you can add or correct any mistake which you have done while filing GSTR1. And then this after filing 1A, the correct figures will auto-populate in GSTR3B. Only condition that 1A to be filed before filing your 3B for the current tax period. It is only talking about current tax period. So second advantage which I have narrated to you. Coming back to some of the important provision from company perspective. Because legal and secretarial, whenever I say, it becomes important for the company perspective. So you must take a note of it. The first one. Let's say you're importing services from your foreign holding company, foreign affiliate. So Indian related party, Indian affiliate is importing services from foreign affiliate parent company. First question, whether reverse charge applicable, import of services. You know, entry number 4 of Schedule 1, import of services by a person, from a related person, or any other any of his establishment outside India, whether in the course of furtherance of business, even without consideration. It is import of services, GST leviable under reverse charge method. Schedule 1, deemed supply. Again, I'm rephrasing so that you get a clarity. From your foreign holding company, you're taking some services in by Indian affiliate, Indian related company, subsidiary company, whether import of services, yes, even though you're not paying any consideration. It is deemed supply. Entry 4, Schedule 1. Reverse charge applicable. You have paid. That's what you'll be checking, right? If you have paid, the next question will come, what will be the valuation? You have not paid any consideration to your foreign holding company, right? So what would be the valuation? Important. And it is not only for import of services. You can draw this analogy for any transaction, including cross charge. I will come back to the cross charge. So what is cross charge? Let me also explain to all of you so that you can get the meaning of it. You're having a HO in Delhi, where your CEO, CFO, common HR, IT accounts team is sitting in HO Delhi, but you're having 4 branches in different 4 states. Question was whether your HO separately registered in Delhi and your 4 branches separately registered in different state under same PAN number, they become distinct person. But whether your HO giving any services to your branches, it is called cross charge. Of course, it's a supply. If it is supply, next question will come, what would be the valuation? Because branches are not giving any amount to the HO. Am I right? What would be the valuation? Cross charge. And cross charge is different from ISD, input service distributor. So cross charge when there is element of service. But ISD is only input service distributor, availing credit on input services and distributing credit among distinct person under same PAN number. And there's no element of service. So that is the broader difference and between cross charge and ISD. So I was on a point, import of services. I said you can draw the same analogy for cross charge as well. GST leviable, but what would be the valuation? And importantly, by recent circular, they have clarified. What they have clarified? Listen, this would be a good tax planning to all of you. I'm giving you good tax planning. What is that? if recipient is entitled for full ITC, recipient is entitled for full ITC. So in case of import of services, it is Indian affiliate who is a recipient. They will pay reverse charge liability and entitled for full ITC. Even in cross charge, this analogy can be adopted. There was an earlier circular number 199, 17 July 2023, with the recent circular need to be read. And I'm giving you silver lining. If recipient is entitled for full ITC, then supplier raising invoice showing any amount that will be considered shall be deemed as an open market value and department will not dispute. Because it's a revenue neutral. That you will pay on that value GST and avail the credit. Revenue neutral. When invoice is being raised, what happens if invoice is not raised? Quite obvious, without consideration, right? Invoice is not raised for the past period. Maybe from 17, 18, 18, 19, 19, 20. What would be the GST impact? Now, this circular is helping all of us together and saying, when recipient entitled for full ITC, then value can be considered as a nil. If value is nil, no GST, quite obvious, being revenue neutral. That being a recipient, if you pay under reverse charge, you avail similar credit. Revenue neutral transaction. That is what the analogy we can draw for the cross charge. But here one question which you must keep to your mind, there are certain exempted sector. They are not getting credit. Hospital, education. Recipient is not entitled for full ITC. Then in that case, what would be the valuation? And there is challenge that salary cost of CEO, CFO, common HR, IT, accounts team need to be included in the valuation. We can't pick up second provision of Rule 28 sub Rule 1 of CGST rules. Circular number 199 has clarified salary cost need not be included. Being part of entry 1 schedule 3, neither a supply of goods nor supply of services. To that extent, you can minimize your cascading. So this is the very interesting and important one. Another one which is applicable for the corporate, you may have taken a loan from your foreign holding company. Being Indian affiliate has taken a loan and they are paying some interest with a GST leviable, whether it is supply first of all, because you have taken only loan, whether it is supply, GST leviable, reverse charge in the hands of Indian affiliate. This transaction may be within India also. An important clarification, you can always go and check back because legal and secretarial loan transactions are so frequent. Clarity. That if you have taken a loan from a foreign holding company, then being Indian affiliate, it is deemed supply. If you look at entry 2 and entry 4 of schedule 1. Entry 4, import of services. Entry 2, supply of goods or services between related person or distinct person in the course of furtherance of business. It is supply. But GST leviable. And circular is clarifying the position. And the circular number which I'm referring to for the loan age 218, circular number 218, dated 26 June 2024, clearly saying this transaction is exempted. Wide entry 27A of notification number 12/2017 exempted. Of course, supply being exempted, no RCM, no reverse charge. So clarity to all of us together, no reverse charge. And second thing which this circular is clarifying, if you have taken any processing fees, then challenge will come. If processing fees is being charged, then GST going to be leviable on that processing fees only. And here, very interesting point, When you take a loan from bank or financial institution or NBFC, you pay interest also and you pay certain processing fees also. Interest exempted loan entry, but processing fees GST chargeable. To that extent, if your processing fees is being charged, GST going to be levied. That is what it is being explained in that circular. Now I'm picking up 2-3 more because my time is also being given according to me that 45 minutes I must speak. So I will not expend, I will not encroach into the area of my co-speaker Sanjay ji. And I know moderator is also watching me so closely. He's keeping watch on timing and you must be also keeping watch. I'm here to tell you more and more, but I'm trying my best that within the time frame, whatever best I can contribute to all of you. 2-3 more points, then I will sum up my presentation today. I'm giving extempore presentation. I know that there is no PowerPoint presentation. And this presentation must go to the government official that being CS, how excellently we are contributing for the GST perspective. We are discussing, we are deliberating, we are raising the concern and representation, lot of things we are doing from our side. So 2-3 more points and then I will sum up my presentation. Let me quickly touch base those 2-3 points. Now coming back, the important one, in corporate sector, the ESOP is very famous. Employee or stock option plan or employee stock purchase plan or restricted stock unit. If you're giving shares under ESOP to your employee concerned, whether GST leviable, I'm just giving food for thought. You may start thinking aloud whether GST leviable. Another provision could be, I'm a domestic company. Let's take an example. I'm a Microsoft in India. I'm a subsidiary company of Microsoft and holding company outside India. I've offered shares of my holding company, Microsoft, to my employee concerned of domestic related party. And whatever it is being shares given to the employee concerned, I will pay the amount to my parent holding company. So domestic company making payment for the shares allotted to the employee concerned, GST leviable. And we do lot many transactions, right? Today is the word of retaining good resources. We want intellectual need to be retained. How to be retained? Human resources are so important as on date. We are giving ESOP, ESPP, RSU, GST leviable or not leviable. I'm giving you the answer. To me, this answer was available. You can always go back to my YouTube channel, lot many videos. You can search me and go to my YouTube channel, lot many. I've said in the past, repeating again, and a clarification is being issued. A clarification is being issued by the circular number 213, dated 26 June 2024, endorsing whatever we have said in the past. What is this? Shares and securities are neither goods nor services. As per the definition of goods under section 2 subsection 52 and services as per section 2 subsection 102 of CGST Act, shares and securities are neither goods nor services. And GST to be levied only on supply of goods or services, right? When it is not goods or services, where the question of GST. But that is what the clarity. And the second important clarity, that even though I'm giving shares to my employee concern in lieu of employment contract, as a compensation towards employment contract, it is excluded. Schedule 3, entry 1, neither a supply of goods nor supply of services. So no GST leviable, a great relief to all of us together, clarification, and it was much needed. Coming back to the second last topic of the day, and then in GST regime, we are talking about why we don't have seamless flow of credit, why there is cascading. You know, section 17, subsection 5. Even though in the course of furtherance of business, credit is being denied. Why such a provision existing in GST law? When we look at preamble of GST Constitution Amendment Act, which have paved way for GST introduction in the country, it was stated there would be seamless flow of credit, RB. There are many condition and restriction. So I'm not discussing those condition and restriction, but we all agree today what is challenging today. Of course, 7th years anniversary of GST. This is our utmost representation, request from ICSI to all GST Council members. Please, they should look at this provision. We need seamless flow of credit. You can't put so many conditions with restriction. It is not giving ease of business. That's what we would be looking for. But what is one clarification has come, and that has come with the circular number 219. Duct and main holes are used for optical fiber cable, and optical fiber cables are being used for telecommunication services. And dispute was whether credit is available or not available. Credit is available or not available dependent upon if it is construction of immovable property, credit is not available. But if it is plant and machinery, credit is available. So duct and main holes, which are used for optical fiber cable for telecommunication services, what is this? It is immovable property or plant and machinery? I'm saying that we can draw the analogy of this circular number 219 for other aspect as well. So it is not only for this particular topic which I'm talking. So they have said in that circular, Bimal, plant and machinery means any apparatus, any equipment, any machinery fixed by foundation or structural support. So plant and machinery fixed by foundation. Foundation can be civil structure or structural support, can be disputed, but no, it is plant and machinery, capitalized in plant and machinery, and credit is available on plant and machinery. When you look at the provision of section 17, subsection 5, clause C and clause D, credit is available. And that is what this circular is referring to. The last point for my today's presentation. Maybe 2-3 minutes more. I'm taking permission from the moderator. So 2-3 minutes more. I'm taking permission from my co-speaker Sanjay ji as well. Which is very much important for all of us. See, in supply chain, we give discount. There are two kinds of discount. One discount which has been given on the invoice. So 100 rupees, 10 rupees discount given on invoice, transaction value 90, GST leviable on 90 rupees. No problem to this. Problem exists only for the post-sale discount, post-supply discount. So when originally invoice was raised, 100 rupees, 18% GST, but 10 rupees is being given as a post-sale discount or post-sale supply incentive, 10 rupees. Whether that is deductible, what is the provision existing? Section 15, subsection 3, clause B, Roman 2 of CGST Act, putting three conditions that for getting benefit of post-supply discount, as a supplier, I'm raising credit note to my buyer. Three conditions need to be satisfied. What are these three conditions? We should have agreement, and that must be executed on or before supply is being made. Second, the credit note raised by the supplier must be linked with the invoices. And third, when I'm raising credit note, GST charge on credit note, I get adjustment with my outward tax. You as a recipient need to reverse corresponding ITC. This part, let me explain with the mathematics, numbers. 100 rupees was the original supply, 18% charge, 18 rupees. 10 rupees is the post-sale discount, 10 rupees, I'm raising credit note, charging GST 1.8, let's say IGST for interstate supply. As a supplier, I get adjustment of 1.8 to adjust with my outward tax liability. I'm getting adjustment with a condition you as a recipient need to reverse 1.8. But believe me, 7 years of GST, there's no mechanism to cross-check. And it is not, I'm not saying, even circular saying there's no mechanism even for the tax officer. Please, 7 years of GST, no mechanism for taxpayer and tax officer to cross-check whether buyer has reversed the credit or not. No window available. And circular acknowledging this position. So see, I'm not acknowledging, it is all acknowledged by CBIC. Now they are giving a relief. What relief they are giving, they're saying that, Bimal, what you need to ensure, because supplier taking a benefit of 1.8 adjustment with the outward tax liability, they are saying, Bimal, if it is less than 5 lakh rupees, GST component, not the amount of credit note, GST component on the amount of credit note, less than 5 lakh rupees, then I can take certificate from my buyer. Buyer can issue a certificate. Recipient can issue a certificate to me saying that I have reversed credit pertaining to the credit note raised by you. No dispute. But if it is more than 5 lakh tax component, I'm saying, then suppliers should take certificate, and they are referring to here another representation from ICSI. They are saying certificate from CA or CMA. Why not CS? Why we should not get the same equal power opportunity? But circular is saying CA or CMA. For that, we must submit our representation from ICSI as well, that whenever we are referring to CA or CMA certificate, it should be at par with the company secretary certificate also. Certificate by a chartered accountant or cost accountant, and per my representation, CS also from recipient. He will issue a certificate to me, to supplier, that my buyer has reversed the credit. Until a mechanism is being evolved on GST portal. So this was on last point which I wanted to draw. 1 minute more and then I will conclude. 7th years of GST anniversary we are enjoying today. GST has, growing faster and faster. I do not know how many of you are watching continuously to me, but I can only tell you one thing. GST is integral part of all compliances. Look at financial, look at accounting, look at audit, look at legal, look at secretarial, and pick up any industry. Can you say without GST we can survive? No way. No way. GST is an integral part of it. So we have to really start contributing. Second, there are many challenges. I am sure that Sanjay ji is going to touch base ease of business and many fake invoice, fake credit perspective, which I'm not touching. And that is what mutually we have decided what we will deliberate among both of us together. So I've not picked up his topic, but we both are trying to ignite your mind. And we must compliment that the institute is taking this initiative forward. Our president has spoken about, moderator, CC member is also talking about. We are also trying from our side to ignite each one who are watching this webinar. Wake up. It's a wake-up call for all of us. Legal and secretarial cannot happen without GST. I'm not saying that we should be master, but we should be having some percentage of GST knowledge, because it is ultimately affecting our costing and pricing as well. And once we know GST, we can see the each compliances. And you have seen one recommendation which I was discussing with the circular. I said they are saying only CA, CMA certificate. Why not CS certificate? So unless we look at those provisions, how we can go back to CBIC and GST Council saying that, sir, we are equally at par with other professions. So please give us the opportunity and we will really deliver the best. And that is what we must take commitment. And please today, if at all we want to see GST as a success story in our career. I'm thanking each one of you who are watching this webinar, Pan India. And as I said, GST applicable from Kashmir to Kanyakumari, irrespective of any language. So I can go to Kerala also now, no language barrier. I can go to Tamil Nadu, no language barrier. Start from somewhere. And that is what the beginning to be. So wish each one of you a great success. Thank you very much for this opportunity. Thank you very much.